This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, March 14th, 2016. Euro dollar. So it's a bit of a choppy mess for the euro right now as the market really remains confined to a broader consolidation over the past few months. At this point, recent highs at 112.19 are key to watch on the top side, while support around 110 at psychological barriers is the key level to watch on a short-term basis on the support side. At this point, a break above 112.19 or back below 110 will be required for clear directional insight. Back above 112.19 will expose the yearly high at 113.77 further up, while back below 110 would open the door for a resumption of declines, exposing the recent lows that we saw down at 108.22. Sterling dollar. So cable has seen a nice recovery over the past several days out from those recent 7-year lows, although overall the downtrend remains firmly intact. At this point, a lower top is still sought out ahead of the next downside extension back towards and eventually below the recent 7-year low at 138.36 and to a measured move objective which coincides with the multi-year base from 2009 at 135. Really, only a close back above 145 would delay this outlook, while back above recent highs at 146.68 would negate the current bearish outlook. Dollar yen. So dollar yen remains confined to a consolidation, which is a bearish consolidation over the past several days, and the market is looking for potentially a next downside extension below the multi-month low at 110.98 further down, exposing the next drop towards the 107 to 108 area. At this point, it would take a break back above previous support at 116 to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss continues to chop around, but overall this market is confined to a broader recovery structure, with the market favored to put in a higher low ahead of the next upside extension back above the recent 112 multi-month high and towards the 115 area further up. At this point, only back below 107.15 would negate this outlook, and any setbacks towards 108 should be very well supported. Aussie dollar. So Aussie has seen a breakout above some key medium-term resistance at 73.85 and then 75.30, and this does suggest that we could see additional gains over the coming days up towards next key resistance at 78.49 further up. That's the high going all the way back to about June of 2015. At this point, any setbacks should be very well supported, and it would really take a break and close back below 73.85 to take the immediate pressure off the downside, off the top side, and suggest that we could see renewed weakness. Dollar CAD. So dollar CAD is now traded down below a key 78.6 fib retracement off of the October 2015 to January 2016 low to high move, and this could expose a full retracement back towards the October base at 28.32 further down. But at the same time, the market is still confined to a longer term uptrend and should start to put in some form of a higher low ahead of a bullish resumption over the coming days. At this point, we would need to see a break back above 34.47 to take the immediate pressure off the downside. Kiwi dollar. So Kiwi continues to be very well capped into any rallies, with the market now stalling out most recently at 68.20, well ahead of that 69 medium-term resistance. At this point, any setback should see look for any rallies to be very well capped and continue to be well capped ahead of 69, with the market favored to break lower below key support at 65.46, which would then expose 63.47 further down. SPX 500. So the S&P 500 is now traded back into an ideal lower top zone between 2000 and 2025, and the market should now look to stall out in favor of a resumption of declines, the formation of a lower top, and eventual break back down towards and below 1808. At this point, only a close back above 2050 would take the immediate pressure off the downside and suggest that this lower top scenario is negated, opening the door for a potential bullish resumption. But again, this market is looking like it's in the process of carving a more meaningful structural top and should be well capped now into additional rallies that should be well capped below 2050 in favor of that break back down towards and below 1808. Gold. So gold has seen some setbacks in recent trade, but ultimately the overall structure now favors additional upside beyond the recent highs that we saw around 1284 and towards the January high from 2015 from January of 2015 at 1307. At this point, any setbacks should be very well supported down towards some previous resistance, now turned support at 1192, with only a break back below to compromise this recovery outlook in gold.